Silver just hit an all-time high of $88.16 now, but this isn't about what you think. The media is telling you it's driven by electric vehicles and solar panels. But I'm here to tell you something entirely different. And if you're holding dollars or dollar-denominated assets, you need to pay attention now. Why is silver spiking like this? And why does it matter to you? Stick around, because in the next few minutes, I'm going to reveal the real reason behind this surge and why it could completely change the way you think about protecting your portfolio. Trust me, you won't hear this anywhere else. So here's the situation. Silver's price is spiking, but it's not about the typical demand factors you're hearing in the news. This isn't about electric vehicles or solar panels. This is much bigger and far more dangerous than anyone is admitting. The real story? A Supreme Court case involving Trump-era tariffs and the potential for a massive $200 billion refund obligation for the U.S. Treasury. That's right, a $200 billion hole the government wasn't planning for. But here's the kicker. The way this unfolds could shake the entire financial system to its core. And if you're not watching the right signals, you might miss the moment when it all comes crashing down. Now ask yourself, what happens when the U.S. government faces a huge, unexpected debt obligation? Where does the money come from? And how does this directly tie into silver's surge? Here's the key point you need to understand. The Supreme Court case I mentioned, if it rules that the tariffs were unconstitutional, the U.S. government is on the hook for a massive refund and somewhere between $180 billion and $220 billion. That's right, a $200 billion payment that the government never planned for. Now, you might be thinking, okay, but why does this matter to silver? Here's the catch. The Treasury doesn't have $200 billion lying around. So what do? They borrow it. And that's where things get uncomfortable. When the government suddenly has to issue a huge amount of new debt, the bond market reacts, and it doesn't react kindly. But here's what no one is saying. The moment they start issuing new debt, it's a red flag for inflation, for higher interest rates, and for a devaluation of the dollar. And guess where smart money is heading when that happens? Right into hard assets. And silver, because of its size and volatility, becomes the asset of choice when the dollar starts losing its shine. Now, this situation is escalating fast. The U.S. government suddenly needs to borrow hundreds of billions to cover this unplanned fiscal obligation. But we're not in a normal environment. The bond market is already stressed, yields are rising, and foreign buyers are pulling back from U.S. debt. So when the Treasury steps in to issue a huge amount of new bonds, what happens? Either they find buyers at existing interest rates, or they have to raise rates to attract them. Both options are disastrous for the dollar. Higher interest rates mean the government's debt becomes more expensive to service, creating a cycle where more debt means more debt, a financial death spiral. But here's the real kicker. If the Federal Reserve steps in to buy those bonds to keep the market from collapsing, it's a clear signal. The government is printing money. That's when inflation skyrockets. When inflation soars, silver and other hard assets start to rocket. Because investors know the more the government prints, the less your dollar is worth. Now let's look at the market in real time. Just today, silver prices surged 4.45%. That's not industrial demand driving this. If it were, the price would have been rising gradually over time, but no. This was a sharp vertical move. And when you see price spikes like this, it's a signal of something else entirely. Investors moving quickly out of assets that are losing value and into silver. Here's the kicker. While silver was hitting new highs in New York, the Shanghai Gold Exchange was pricing silver at $98. That's a $10 premium. In normal markets, you might see a $1 or $2 difference, but $10? That's an 11% premium. Why? Because silver is being pulled out of Western vaults and sent to the East. And what happens when the physical market and the paper market start to disconnect? The price in the paper market becomes irrelevant. When there's no metal left to buy at that price, the true price of silver, the physical price, will skyrocket. That's the risk investors are betting on right now. And it's already happening. Things are moving fast. Just in the last few hours, there's been a massive divergence in the silver market. The $10 premium between New York and Shanghai is just the beginning. We're seeing Western vaults emptying out, and the pressure is mounting. And it doesn't stop there. On top of the price spikes, we've got a few other developments to track. The bond market is already showing signs of strain, with yields creeping higher. The Fed hasn't stepped in yet, but the pressure is building. What happens if this continues? If the bond market starts breaking down, if the Fed starts printing money to cover the debt, we could see a massive wave of capital fleeing the dollar. And as the dollar weakens, silver, and other hard assets will surge. It's not a matter of if anymore, it's a matter of when. And if you're not already positioned, you're running out of time. Now, let's step back and consider how this affects you. This isn't just about markets or numbers. This is about real-world consequences. If you're holding dollars or dollar-denominated assets, you're already feeling the pressure. The purchasing power of your money is being eroded as inflation climbs. Imagine the impact when the dollar starts to lose its credibility. Suddenly, everything from gas prices to groceries becomes more expensive. And if you're relying on savings or bonds for security, that security begins to crumble. The pain isn't just theoretical, it's very real, and it's coming fast. If this resonates with you, drop a comment and let me know. Are you starting to feel the strain? Because it's not just financial experts or institutional investors that are affected. It's everyone who's holding on to currency in a system that's clearly at risk. Now, let's take a step back and understand the deeper forces at play. This isn't just a crisis of one court decision or a temporary market move. What we're witnessing is a breakdown in the entire system. Governments have borrowed far more than they can realistically pay back. And now the chickens are coming home to roost. The mechanism here is simple. When the government needs to raise emergency funds, they turn to the bond market. But if the bond market starts to fail, the Fed steps in and prints more money. This creates a vicious cycle where the value of the dollar erodes and capital starts fleeing to hard assets like gold and silver. This shift doesn't happen overnight, but when it starts, it accelerates quickly. This is what I mean by fiscal flight to quality. When the system shows cracks, smart money moves out of currencies and into assets that can't be printed or devalued. That's why silver is moving the way it is right now. Investors know the dollar is losing its credibility, and they're positioning themselves for what's coming next. So what happens next? We're at a crossroads, and there are two very real possibilities unfolding right now. The first is that the market continues to ignore the warning signs, and silver's price shoots up even higher as investors flood into it. If the $10 premium in Shanghai holds, or if the bond market shows further cracks, we could see an even faster rush to hard assets. That could push silver prices into uncharted territory, $150, $200, even higher. But there's another path, too. The Supreme Court could delay its decision, or the government might announce a temporary stay. If that happens, silver could cool off in the short term, the panic could subside, and prices might even dip back down. The risk, though, is that when the market does react, it might do so faster than anyone anticipates. And when it does, the moves will be brutal. Here's the key takeaway. The momentum is already building. Whether it plays out in weeks or months, the next move is already in motion. The question is, are you positioned to take advantage of it? So, what's the bottom line here? The real story behind silver's spike is much bigger than electric vehicles or solar panels. It's about a government on the edge of a fiscal crisis facing a $200 billion bill that it wasn't ready for. The fallout from that could send silver and other hard assets into a new era of volatility. But here's the twist. By the time the mainstream catches up, it might be too late. The real smart money is already positioning for this. If you're still sitting on the sidelines, you might miss your chance to protect your wealth. If you want to stay ahead of this, make sure you're subscribed. The next few weeks could bring more surprises, and I'll be watching closely. If you want to see the historical context for this, check out my deep dive on the 1920s silver crisis. It's a blueprint for what we're seeing now. The link's in the description. Stay sharp, keep your eyes on the indicators, and prepare for what's coming next. Trust me, you don't want to be the last one to figure this out.